Markets with May, and in this episode, I'm going to talk about Baba on the quick, just doing a recap of the quarter. And it's always really interesting because most news reporters that cover Baba don't actually speak Chinese. And even though the call is done English Chinese translation, as a result, you get a really weird set of stuff that's said about what really was a great quarter. And I'm going to go through the financials so you can see it very clearly. There is a replay available so you can listen to the call yourself and make your own call on this. But by any metrics, this company is really cheap right now. I really don't know another way to say it. It's also, by the way, one of the only retailers that had both top line and bottom line growth. So let's actually go through this. Yes, I have a position in Baba. You guys know that. There are also past videos, but there was actually clarification on exactly how to think about the share count on ordinaries versus regulars. And it was really clearly laid out as given that they had to also talk about the sheer raw magnitude of the buyback that they did this last quarter. So let's take a look. Past performance is not indicative of future returns. I wanted to do this really quick because I do have to get back to my trading and other things that are going on right now. But here's what happened on the quarter. Revenue up 2%. I'm going to show you the mix of this and why I think it's pretty phenomenal. Operating income was up 395%, meaning they got great operating leverage due to expense reduction primarily is what is really how you interpret that. If you look through the numbers, you'll see the same thing. So there were a couple of impairment differences from previous quarters to this quarter. But no matter what, given how big the operating income upside was, it doesn't even matter. Net income up 237%, EPS up 74%. And this is because this is the complexity of Baba, which is you've got all these other subs that come in. And so if you look at the bottom line here, if you look down below, you'll see that part of the reason why the EPS upside wasn't as high as the net income upside on just the Baba company itself was because there were some previous year, a bunch of positive items related to the various investments that Baba does. Now, Baba is in a lot of ways a big private equity firm, just like Google is a big private equity firm in its own right. And just like everyone else, Amazon, et cetera, is a private equity firm. So because last quarter there was a gain, or excuse me, last year, so year over year, there was a huge gain. Cosmetically, the EPS only looks up 74% versus the craziness of the net income number above that. Okay, let's go through the revenue mix because this is kind of my whole point. Direct sales was great, up 10%. Customer management was down 9%. That's fees that they're charging the sellers. So a lot of ways, this is the China commerce retail business. And we had talked about the fact that it really was going to be a post-Chinese New Year's event for this company because it depended whether or not they would open up ahead of Chinese New Year's. They said that immediately after Lantern Festival, which is the last day of Chinese New Year's, kind of depending how you look at it, things picked up. And so when you think about it that way, that's actually really good for the following year. I'm going to show you what they did first quarter of last year as well, just to give you a sense for it. But given the direct sales, they literally compensated for the weakness in direct sales by just charging their sellers less. And they could do that because their balance sheet is way the F stronger than most retailers. I'm going to show you that. The wholesale business was flat. That's fine. It kind of makes sense because really we were talking about what would happen with the China reopening situation, which really was a post-Chinese New Year's situation because you still don't have full vax. International commerce, though, this is what I'm talking about. It was such a small percentage all through last year of what was going on. And you can see the international commerce retail pickup up 26%. This is going to continue. And this is going to continue because China doesn't have the same inflation numbers that everybody else has been getting this entire time. I mean, if you look at the inflation statistics for China and then realize that they don't have the massive deficit that everybody else has, they're in a really good spot. GDP, by the way, annualized GDP growth estimates for the next 10 years about 5%. That is part of the reason why this story really does have legs. And so whatever's going on today is very much so geopolitical weirdness that's going on. Now, I always highlight Cainiao because I think Cainiao is probably the most interesting piece. Everybody else probably has their own opinion, but Cainiao is the logistics piece. It's basically their FedEx, but it's not just like FedEx, because the logistics that's been built out in just the Cainiao capabilities, it was part of this bigger plan to allow China itself to ship out of Hong Kong to about 50% of the total population of the world in about 5 hours, so that you could do a very particular type of sales, a very particular type of manufacturing. China continues to grow like crazy. Interestingly enough, nobody tried to ask them this time if they were going to spin out China, and I don't think they ever will. Yeah, it is. Thank you, Hadouken. That's totally correct. Hold on. Let me, I'll bring that up too. This is correct. I'm totally with you on this. Okay, so now let's go to the next piece because I think this is really important. I wanted to just highlight, and I'll come back to this slide. They repurchased $3.3 billion and plenty to go. I didn't write down the exact, 21.3 billion is remaining under current authorization. But what makes this very different than other companies that are just mouthing share buyback is they actually did it. And also their market cap is only about 200 billion. So they're a much smaller company doing a massive share buyback than all the other big companies out there doing it. And so it's really interesting to me because we now know why the company rallies so hard. It's actually just the company buying back its shares and any investor that wants to tag along with. Now, I kind of also want to show you why a few other things on this, but the geopolitics, I get it. It's going to take hold. Here's the balance sheet. 28 billion in cash. If you add up all of their borrowings, depending on how you like to do borrowings, I'm including other liabilities on the off chance that's an operating lease, and in my mind it would be included. But you get a $2.2 billion position. By the way, there aren't the retailers that have a $2.2 billion net cash position. Most of them are still funding with debt, other formats. And Amazon, not even close, my friends. Go look at the balance sheet and you'll see very clearly what's what. That's part of the reason why when another company announces share buyback, it doesn't make any sense to me. Additionally, this company has really gone through the worst period. It's weathered the Chinese lockdown. So the only other thing that it could be is the geopolitics, because they're about, like, this government has announced that it's going into massive growth mode and is doing a number of things to try to promote that. So realize that is just whatever's going on today. It's geopolitical. It kind of is what it is. And that's a real thing. So don't get me wrong. Okay. They produce an EBITDA number and an EBITDA number. So you just have to kind of look at it as EBITDA, because I think that's, if you're going to try to compare the valuation to other US companies, you really should compare the same. So adjusted EBITDA, and it's actually adjusted for all the other stuff that's going on with them as relates to their investment house, because that's kind of its own animal. But adjusted EBITDA is 20.8 for the last 9 months. Okay. So that means, given that they did 8.5 billion US dollars in fourth quarter, which was weaker than a normal fourth quarter for them. Why was it weaker? Because basically China didn't open it up. Okay. It's a little bit hard, I know, to see the numbers because my little face is in that way. Let me just, figure out how to change it. But yeah, correct. That's right. But they do EBITDA, so they remove just the D&A's perspection, or they just remove the depreciation portion. Correct. Okay, so I'm looking at some of the notes. So, all right, so that is 20.8. Let me see if I can move this so you guys can see this better. That should take it out of where it is on the screen. 20.8 billion US EBITDA. If you look at EBITDA. Okay, EBITDA is a little bit less because you're basically leaving the depreciation in there. But if you look at what they've in the past, let me see if I put it here. Ooh. Oh my goodness, I don't have it here. Okay, if you look at what they've done in the past, usually the first quarter is something like, I can't believe I didn't add it in here. Sorry. usually the first quarter is something like, this is what the first quarter it was in 2020, 2021, and 2022. And you can see that 2022 was really weak. That was when a lot of the lockdowns happened. It was 3.6 billion. In 21, it was 4.5 billion US dollars. Okay, so if math, 20.8, and we'll just use the 3.6 number, which given that they don't have the stress that they had last year on EBITDA, you would expect that's probably a reasonable estimate. But you use 3.6 billion because that was the official number from if you're trying to do a trailing 12-month number. 2.6 billion is what you get 24 billion. Market cap 2.6 billion shares outstanding if you're using the ADR, which is the correct way to do it because they did the translation for you in the quarterly statements this quarter, so there'd be no confusion. The stock is trading under $100, but I used $100 to keep the math simple. So 206 billion is the market value. Okay, the enterprise value, you subtract the 2 billion in net cash, you get 204 billion. So 204 divided by this 24 billion is 8.5 times enterprise value to EBITDA for a company that grew top line at, here we go. They grew top line at 2%. Net income was up 237%, EPS up 74%. Coming out, so getting operating leverage coming out of the worst period ever, and you're going to essentially pay 8 times trailing EBITDA for it. It's like so cheap. Realizing that another way to think of that number is this company literally makes back for every dollar you give it, it's literally making all of it back in 8 years, provided it doesn't actually grow anymore, provided it does what it did last year, which doesn't make any sense because they were locked down all last year. So that's the craziness of the valuation right this minute on Alibaba. Let me see if there's a couple other things I think I wanted to show. Balance sheet. Okay. Yeah, I think that is really, yeah, that's about it for all I have prepared. The only other thing, the only other thing that I would mention is on this shares outstanding calculation is that this 21 billion remaining under the current authorization is a huge buyback. Even relative, like some of you guys may have remembered that I was a little bit nasty about Meta's buyback, but the biggest difference between Meta and what Alibaba is currently set up to do is the fact that Meta, yeah, I'm sorry, FTWNF. I think you probably just don't know the other 5 websites that they have. So I think that you might be using AliExpress possibly, but realize, just have a look at the numbers. It's not that big a piece of their business. Taobao is by far the biggest piece. It's used like crazy in China. You don't know what you're talking about, but I think it's really sweet that you tried anyways. Sorry, I'm a little bit, during the trading day, I usually try not to do these videos for that reason. Sorry about that. What I would say is that, it really does have one of the it's like, for the market size, that dollar value is a little bit nuts, and it has cash. It's going into a good environment. It doesn't have to massively reinvest to fix its business model like Facebook does. So that kind of, it's like hysterical that this thing is trading down. Now let's go to some of these questions. ADRs are negotiable securities issued at a bank. Yeah, that's correct, Adukin. So the ADRs, especially the issue with China too, is because of the way that Chinese share legislation works. You would have to get them as an ADR or ADS, I think is the way they call it, American Depository Shares. It's like it's essentially an ADR. It is the case that you do have the VIE structure issues, but at this point, given what's happening in China, let alone here, that risk was a last year risk more than it's this year risk. Additionally, I think a lot of people think that because of geopolitics or because of what's going on, the retail environment or global GDP will slow. That may be true, but that's actually the exact opposite of the way that the Chinese are doing it right this minute, because the Chinese actually have enough reserve capital to support trying to grow the economy. So it's a little bit of a different animal to apply that thought process to China. Additionally, they usually benefit a lot. I mean, what I think is really important is the wholesale number was actually flat. And we know that given the lack of inflation that happened in China versus the rest of the world, and what's going to continue to happen in the rest of the world, and the fact that we know that China subsidizes certain types of things, namely electricity, so that it helps all their economy, like Baba is being set up for the very best situation globally that it could possibly get. And so that's why I find it very interesting. Um, yeah, correct. Yes, agreed. Thanks, Hadouken. I love it. Hadouken with the definitions. Hopefully, here, let me just open up the chat so you guys can see. He does a great job making sure that the definitions are crisp, because some of this, when you're talking impromptu, is not the most straightforward stuff. I Yeah. So Alibaba they have AliExpress. That would be the way that most people use it. They would not use the Alibaba website. So that might be part of the reason you're experiencing that. AliExpress is still difficult for US people to use, but it's quite frankly very easy for people foreign to use. Like my understanding, I mean, that's why the numbers are the way they are. But especially in countries outside of the US that really have limited manufacturing, it's exceptionally like it's very commonly used. Additionally, there are a couple of different Alibaba websites, so you really have to go to more than one. There's Taobao, which is the main one used in China. There is there are also several different wholesale ones. Okay, FTN F like whatever, I don't know what your name is, but it sounds like you're just a short seller of it. Totally feel you on that. Things can get cheaper before they get expensive, but here's the facts. This was a good quarter. And so, like, it's not the first time a stock has traded down on the good quarter, but this thing is crazy cheap. I will say that. At 8 times enterprise value to EBITDA, there is not another retailer that's actually growing that looks anything like that. I mean, just look around. Just look at, like, compare the valuation to literally any other retailer, and you'll see that that's true. All right. I'll go ahead and end it. Clearly, the short sellers are in it. Otherwise, FTWNF wouldn't have come onto my vlog, and that is what it is. So, anyways, nice way to gain followers. I'm not even sure what that means. I just do this. I would love to gain more followers. So FTN and I can't say your name. FT. If that's what you think will work, awesome sauce. I actually, kind of is what it is. Look, okay, FTWNF is posting a bunch of stuff. He's really upset because he's a short seller. Sorry, but it's just the truth, okay? If you just don't know this company very well, but you're short selling it because the technicals tell you to, that's awesome. You should. That's your style of trading. This is what this channel is about. I actually just tell you what the company actually said. I can see that the news flow is messed up on it because most people can't either read the Chinese or understand the Chinese on the call. So it kind of is what it is. All right, we'll go ahead and end this. But everybody have an awesome